Good evening, ladies and gentlemen. This is the Tommy D. Duncan III, otherwise TD3. It is Wednesday, December the 10th, 2022. And ladies and gentlemen, if it is Wednesday evening, it is Black Men Speak. Ladies, we'd like to welcome you every Wednesday night and tonight in particular because we have two very, very interesting return guests that we're going to be sharing a lot great information with you with. Is not going to be with us this evening. He's a little bit under the weather, so he is going to be supporting us on the back end side with the production, and we certainly hope that he will be back next week. So those out there who are prayer warriors, do please make sure that you lift Jimmy's health and his recovery or prayers. But without further ado, we would like to introduce two of our real estate gurus that we've had on a couple of times before, Mr. Dwight Johnson of D1 Realty Team and Mr. Tirrell Richard of Affinity Mortgage. And ladies and gentlemen, there's been that's been going on. Of course, this year we just came out of the midterm elections. I think everything is officially closed on the books now that the runoff election is over with in Georgia. Of course, there's been a lot of activity with the Fed and some of their policy movements that's happened in real estate since we last talked. And that is why we have our two experts back to talk to us about what they've been seeing this year and talk about maybe what 2023 might look like. So we're going to have each of our specials what they do, and then we're going to go ahead and move forward with the conversation. My good friend, Dwight Johnson, welcome back, my friend. Introduce yourself. Tell us a little bit about what you do, and then we will go to Mr. Richard.
Good evening, guys. It's an honor and a privilege to be back with you guys again. I just love this platform and the information that you guys bring to your audience. I'm a big fan of the show, and again, great to be back here in this fourth quarter. I am Dwight Johnson with the D1 Realty Team. I'm powered by Keller Williams Houston Preferred out of the Houston area. I am a residential real estate agent. I call myself a real estate wealth advisor, which fits hand in hand with this show. Just love having informed clients, giving people information and help them make informed decisions about most important decision largest decision that most people make, buying a home or investing. So it's an honor to be back, and I hope Jimmy will be feeling well and back with us real soon.
Thank you so much. All right, Tirrell, tell us a little bit about yourself. Introduce yourself, sir.
Well, first of all, thank you, Tommy and Jay, for having me back again. It's definitely a pleasure to be part of the show. I think this is a very important show, and you have great topics, and, I'm all in with you. My name is Tirrell Richard. I am a mortgage loan officer and branch manager. I've been in this business for about 24 years. And I look at it, my job is to, speak with my clients and help them make the best decisions and find the best loan out there for them. It's not a one size fit all. You have to find out their lifestyle and what loan makes the most sense for them. And that's what I do. I pair them with the proper mortgage and put them in a financial situation to win.
All right, so ladies and gentlemen, as you can see, we definitely have the 1-2 punch with us tonight when it comes to real estate and wealth creation. And we say that because when you look at America, the foundation of this country, and you look at families, communities, and this foundation of practically every family's wealth begins with real estate, usually with home ownership. And it is the largest part of most people's wealth portfolio. And so that's why we're here, ladies and gentlemen. Black Men Speak, one of the most provocative shows out there when it comes to informing and tooling you to make the best decisions. So we are going to start off our show and talk a little bit about, some things that we've talked about before, but get everyone caught up with what we're doing. So there's been a lot that's been going on this year. We've had several increases in the interest rate by the Fed. I think everybody's hoping that they are done for the year. And the market has cooled down a little bit from the last time we talked. So let's talk a little bit, guys, first about how Fed policy this year has impacted, to what degree, the real estate and the housing market for individual and institutional buyers. We'll start out a little bit with you, Tirrell, and then we will go to you, Dwight. Tirrell, what say you, my friend?
Well, first of all, what behind the scenes, what a lot of the Americans and your viewers, what they don't see is when these policies have been created, and kind of what it did is kind of tighten the approval status that you can do. So a client last year could be approved a little bit easier than they can this year, and that's because there's concerns about going into recession. And they want to make sure that we are, loaning to the people that have the best ability to pay back. Also, with the rates going up, it has affected the purchase power of everybody. One of my interesting statistics I like to share is that last December, a client that had a loan amount of $600,000 is this year right now, or today right now, they can afford with the same payment. It'll be about approximately the same payment, a $400,000 house. So your $400,000 house right now is the same as the $600,000 house last year.
Wait. Let me make sure I got this right. $200,000 difference between the end of last year and this year.
Yeah, principal and interest, not tax insurance, but yes, that because the rates are up, it's a lot. It's higher than it was last year. So this is the most important time for you to get with mortgage professionals, such as Dwight or myself, that knows the market and also has a plan, because we're not just going to, put you out there. We have different products that may put you in the right situation.
Gotcha. And what are your thoughts on that, Dwight? I know you guys kind of you market, but a different function. So what are you seeing in terms of Fed policy, interest rates, and what have you been seeing on your end?
Yeah, absolutely. Don't get too much into the Fed policies and so forth, but obviously the Fed's trying to impact inflation, and the way they do that is by raising rates. When we raise the rates, it just makes things less affordable. Just in the example that Brother Tirrell just talked about, you may have to step down your neighborhood, or you may have to, if you have a certain style or a certain type of house that you want, you may not be able to afford it with the particular budget that you had aimed to have. So you're gonna have to increase your budget, decrease your price point, or decrease your must-haves on the list. So we're basically seeing those type of opportunities. The one thing though that has been beneficial to some degree is because of that rate, homes are not moving quite as fast. So there's always positivity in every situation, negatives and positives. We did see when the rates were historically low, and they were definitely the lowest, I think, of all time that we've come out of, lowest in history. We saw many folks having to overpay for homes just to get it. So the rate was good, but you may have had to, if you wanted that particular house, you had to pay exactly what the seller was asking on the seller's terms, etc. And you had to do it rather swiftly if you had any chance of getting that home. So on the positive side, now you're not having to make decisions in haste. You can shop around and you can negotiate repairs and you can negotiate things. Things are far more negotiable. So that's from my seat, I'm seeing that, the rates are higher, which does affect your purchasing power. But if you have to be in the market and you partner with the right professionals, now is a time that we may be able to essentially buy something at value versus potentially overpaying. So always want to try to find a silver lining in every situation.
You bring up some very interesting points in terms of the timing, because last time we talked and we talked about this, offline. Every time you saw something on the market, it was 20 buyers in line trying to secure that property, and properties were literally on the market a day, days was probably the rarity. But as soon as it hit the market, boom, you had 20-25 different offers. It's unprecedented. You could say it's unprecedented. I don't know, but I've never seen anything like this before.
Yeah, that's right. Yeah, we definitely had lots of offers, which you may have to give up some negotiating power. Maybe if you didn't have to overpay, maybe you had to accept a home without a full inspection, and maybe you bought a home with a problem. So again, the theme we'll kind of make the sub theme here is it's going to matter who you're in business with, and so when you partner with the right professionals, it's not all doom and gloom at this point. If you need to buy and you have equity. And, there's always time to make moves in any market, whether it's up or down, et cetera. So, we want to, I know we talked a little bit offline about the difference between logic and emotion. So what we want to do is, give you all the tools so you can make logical decisions as opposed to emotional. So back then people were making hasty decisions out of emotion. I got to have, the rates are so cheap. Now people are letting the emotion maybe keep them on the sideline unnecessarily, thinking this is just unreasonably high rates, when in fact, this is Brother Tirrell's area. I think where we are now is probably where we are if you go over the last 20 years. We're really, it's more of a balanced market versus unfair one way or fair the other way. So, and again, that's again, the perception and the emotion is telling us, it's too high, it's unreasonable. Really, it's very
and let's cut to the bone on here. So you mentioned the emotion versus the ration in making a decision, and you're kind of on the front end, negotiating and dealing with a buyer and or seller. How much of an impact does the emotional side really have on decisions? What does that look like? And we want to kind of understand that it's human behavior. But we also want to educate folks market right now, or maybe looking to get into the market within the next couple of years.
You want to take that, Tirrell?
I'll definitely take that. Well, what I've noticed from the emotional part, and one thing Dwight said, I think he's been very generous. Last year, people weren't buying at what the selling price was. I had many people buy $100,000 more than the selling price. A lot of offers were, at least 30 to 40, 50,000 higher than what the house was selling for in order to win that bid.
Why?
Because there were so many.
What was triggering that?
There were so many people to compete against.
Limited inventory,
very limited inventory, and the frustration too. I had many clients that were on the market for 3, 4, 5 months, and they had lost 15, 16, 17, 18, 19, 20 homes. I had clients telling me that they felt like failures when they weren't getting these homes. They felt like failures to their family. So that makes it more emotional. Now I'm not going to lose this one. I'm going to bid 80,000. So it became, with the limited inventory, it became just a drag out fight, knock them down. It was tough. It was tough for a lot of people out there.
So, it's interesting. So you talk about somebody with the market being so not red hot, but probably white hot, that people literally could not get a home for their families. And so there was an emotional response that was being triggered. You have a lot of people who were buying homes probably well above. They were buying at market, but they weren't really buying at a certain value. Now things have cooled off a little bit. Inflation, inflation obviously is up. The Fed has raised interest rates several times in order to cool off inflation. We don't want to paint a less than rose, but what are those folks thinking or saying now? What does that look like? And for someone who's now maybe considering the market or getting into the market, what is the difference for them?
It's probably, this sounds like an oxymoron. It's the same difference. You could have overpaid for a lesser rate, whereas now you have the opportunity to at least buy at value, or potentially if there's a seller that is motivated enough and has to sell, you might buy at below value with a higher rate. So to me, it could in some instances be the same difference.
Balance it out.
If we can eliminate some of that emotion, it's going to go back. It's our job. We know how important of a decision this is, but it's our job to keep the emotions between the lines. So we understand that, the passion and the drive, and in some cases the sheer motivation. But if you can allow us to give you all the information and process the information, make that logical decision versus that emotional decision. Like I said, in many cases, someone today, and I wish I would have put together an actual number study, but someone today could be buying a $400,000 house at 6%, and they might be in the exact same position that someone bought a house for $450 9 months ago at 4%. And I'm not, Tirrell can correct me, but you get the idea.
I agree.
But the same price.
It's not that much of a difference. So,
wow.
At the end of it, from a monthly obligation and a monetary standpoint. And one thing I'll add to what you said, when folks were paying that 30, 40, 50, maybe 80, that's over the market value. We didn't say, that kind of became the market, but in the examples he's talking about, they were literally overpaying to get that home at 2%, 3%.
Correct.
Yeah,
Gotcha.
That value wasn't
Gotcha.
$50,000, $60,000, $70,000 more. That
Mm.
value was whatever the appraised value was, but they were paying more to get it.
Out of their pockets.
Gotcha. And folks, just before we go a little bit further, do feel free to like, subscribe, and share this information if you find it valuable. We do want to make sure the best brains in the industry to share this information, as Jimmy would always say, and this is for free. So make sure that you're sharing this information, making sure that you're writing notes, minutes down, so you can share this information with your family, loved ones, and those who you feel that might benefit from this. And also, at the very beginning of the show, when we opened up, of course, thanking Liquid for our theme song and our theme music for this show, and then, of course, For Us Films for our virtual studio. And also, if you do have thoughts or questions, or you like to ask a specific question, our speakers tonight, do feel free to join us on the chat line, which is open, to share your thoughts or ask a question. Or you may also call in and ask your question at 972-497-2280. All right, let's go ahead and move forward with the show. I read an article, it's probably been a few months or so ago, that said that the home ownership rate in the Black community had increased, a bit. And this was kind of a post-COVID thing. And I found that pretty interesting because, obviously there's a large gap in our communities in particular and the mainstream market. Is that something that you guys saw on your end in terms of either an increase or a growth within our communities in home ownership? What were you seeing out there over the last year or so as things were beginning to loosen up?
I actually believe that, I definitely actually believe that, yes, we've had an increase. I'm not 100% sure why, but I have seen that there's more educated minorities out there that are wanting to be homeowners. They have learned that when you rent, you're paying 100% interest. And when you buy, you're investing for the future. And, we're doing a great job.
So we don't miss that. When you say when you rent, you pay 100% interest. What does that mean?
That means your whole payment goes towards nothing. It goes towards you living there. It doesn't help you buy anything. You're not paying, none of the money you spend is going to buy that apartment or buy that house that you're renting. So,
it looks like we may have a caller coming in. So I'm going to answer this phone and see if we have a question or a thought. Good evening. This is Black Men Speak, your host, Tommy Duncan. Welcome this evening. If you could, give us your name, question, or thought for this evening on real estate. Hello, are you there, caller?
Caller's here, yes.
Yes. Welcome to Black Men Speak. Welcome to our show tonight on real estate. Tell us who you are, where you're from, and what your question is tonight.
I'm a nomad, so I don't know where I'm from.
Okay.
I guess I'm from French Polynesia, the island of Maria.
Okay. All right. Very good. Well, Mr. Nomad, what are your thoughts or questions tonight on the real estate market?
In the U.S. or around the world?
In the U.S. We'll focus on the U.S.
Right now is not a good time, I guess, to buy, depending on the economy, the politics. There's a lot of gentrification, take over neighborhoods. But I think that we have a solid foundation on land ownership. By and large, I think we're doing quite well. There are a lot of successful people who own properties and rent out properties. It's cyclical. The interest rate right now is not a buyer's market. So I think for the most part, it's okay. Now, me, I'm biased.
Okay.
Because I'm a nomad. I just travel from place to place.
Okay.
Eventually, I will set roots. But I am going to live abroad.
Okay. Gotcha.
Either Panama or Brazil.
All right.
So I'm not really the one to ask about it, but I do know that the market is, from what I've read, for all the time. I just came back from the Polynesian cruise, but
everybody,
so for the most part,
everybody ain't so blessed. Thank you.
Well, they are blessed in other ways.
Okay.
And they choose to live a different lifestyle. This lifestyle is not for everyone. And if I had real estate, it would be quite difficult to be able to manage my real estate and not be there. So
Gotcha.
It has pros and its cons. I think real estate is one of the best opportunities for us to acquire wealth.
Yes.
Pass down legacy.
Yes.
And generation how to continue that legacy.
Yes.
So that is a great tool to teach to younger people. This is how, other than marriage, this is how you build wealth and keep the wealth in the family.
Good deal. Good deal. All right. Well, thank you very much for calling in and joining us tonight. And I'm going to pull a couple of questions from what you just said. And thank you for calling in tonight, Mr. Nomad.
Have a wonderful night.
All right. All right. So he had a couple of things that kind of piqued my attention. One, just talking about, where we are in good or bad time, obviously because of the interest rate, so to speak. But the other thing that he mentioned for our younger generation, millennials, Generation Z, is, what this market looks like for them and what they should be thinking about and doing right in the market, or how, if you're with your engagement with the younger generation, what has that been looking like, and what kind of advice and thought would you give to the millennials and the Gen Zers who are now getting into the market, working and making some money? Either of you can start. We'll talk. We'll have Dwight, you to share your thoughts first, and then we'll go to Tirrell.
Right. Well, there's a young man out in this area that does a very similar podcast to the millennials about empowerment and education and wealth. So I would definitely tell those guys to get tuned in and follow broadcast programs like this, or even ones that are more geared specifically to them, because education is the key at any age, but particularly your question was regarding the millennials. I'd say get informed. And we're seeing a lot of them making real estate decisions where I'm working with 3 people now that are looking to, it's a rental situation, but they're renting a very large house for cheaper than they could individually rent individual places together, with a game plan of maybe in a year or so positioning themselves to buy. So there are a lot of smart millennials out there that are doing those things. So I would just encourage them all to be thinking about real estate. One of the things that I would also say to millennials, a lot of them, the objection that they may give you is, I don't know how long I'm going to be here, or if I even want to live here, things like that. And this sort of speaks to our caller, Mr. Nomad, as well. Personally, not from a financial standpoint or anything like that, but personally, I think it's always a good time to buy real estate if you're working with the right folks. Correct. So
even when
absolutely, my philosophy is
higher.
I have a new shirt. I should have debuted it tonight. It says, "Don't wait to buy real estate and wait." So I should have debuted my tee today. But at any rate, so if you're a millennial and you don't know where you're going to be, I would still encourage you, if it is in fact cheaper to own than rent, which in 98% of the cases that's going to be the case, buy it and then think about, when you're no longer here, either leasing it out or, Airbnb it or something like that. So not that we would be pressuring you on the sales side, but we could always make a very compelling argument for why real estate is the way to go, because this is a show about building wealth. And we all can agree it's probably the number one way to build wealth is through the vehicle of real estate.
Correct.
What are you saying? What are you thinking, Tirrell?
I definitely appreciate the caller, and, I definitely disagree with him that this is not a buyer's market. It is definitely a buyer's market. What Dwight so eloquently said was that there's always a silver lining. What happened this year that is better for buyers now. We've actually, as lenders, we have recognized that you do not qualify as much as you qualify for last year. So what that does on the lending aspect is it forces us to bring out better products. We have way better products this year than we had last year, and for reasons. The real estate market for lenders is down over 50% this year compared to last year. So to make sure that they can afford, we had to come up with different products to make sure that we are not leaving people that want to buy houses out there. So as we mentioned last year, a house that probably sold for $350, you can probably, and $350 with you paying everything. You got no help from the seller. This year, that same house probably goes for $300. A lot of values have gone down this year. So you get that and you get the seller's help. So there is a silver lining. The rates may be a little bit higher, but that doesn't matter, because overall and throughout time, you're going to win in the end. Real estate goes up, it goes up, it goes up. There are times it does go down, but you wait long enough, as the T-shirt that Dwight should have wore said, you need to wait. It's going to go back. It's going to, you're going to make money. You're going to build wealth.
Gotcha. We have a couple of questions on our chat line that we'd like to have either one or both of you to address from Michael Patton, who actually was on our show recently. It says, what are moves we should make to be prepared for the buying season? And from what I'm hearing from you, it's always buying season. But what are the moves we should make to be prepared for the buying season? Maybe that's for us individually. And then also, what are some strategies to identify a quality?
Hey, Tommy, could I, before we address that,
yes,
I'll let Tirrell take the first one. I'll take the second one, but I just wanted to speak to Mr. Nomad. Hopefully he'll be on for the full show. So we've both kind of respectfully disagreed about the time to buy. But secondly, from that, it says, when you partner with the right people, even if you're a nomad and now it's not the time, one, you can be getting education, and two, just wanted to put just a shameless plug out there that when you have folks that have a vast network, with Keller Williams, we have about 184,000 associates around the world. So we can actually partner you with top professionals, even in Panama and Brazil and other places like that. So before we lost that, I just wanted to kind of speak to that, because I'm always grateful when callers will call or text in, because it makes the show a lot better. So we appreciate you listening. We appreciate the call. But Tirrell, if you want to address the first question for Mr. Patton, I'll take the second.
Definitely. So for Mr. Patton, the moves that you should be making right now to prepare yourself, first of all, you need to know your credit. If you don't know your credit, you do need to get with a quality lender, have us pull your credit, and have us educate you on your credit. Also, we're going to also educate you on what you can expect as far as down payments. So we're going to make sure that you are saving the amount of money that you need. And, back to when I say know your credit, the best thing about doing it earlier is this. If you pull a certain credit score, me as a lender, if I know you want to buy in 3 months, there are some things I can tell you to do to increase your credit score so that you get a better interest rate. So the earlier you let me know, or earlier I see where your credit is, the better I can help get your credit. So when it's time to buy. So the big thing is to know your credit, to get with a lender and start letting us know about, why you want to buy, where you want to buy, so we can educate you and help you pick the correct areas, put you with the best real estate person in that area, and get you ready to buy, before buying season, not during buying season. Always start before you want to buy.
Gotcha.
All right.
You're well before you're thirsty.
Definitely.
Well said.
Gotcha.
Love that. Thanks again for the question in the chat, Mr. Patton. Regarding qualities in a realtor, number one, I'd recommend you interview at least 2. It's okay to interview 3. You don't need to interview 20, but at least 2. So because it's a service, you want to make sure you're hiring a person that's going to listen to your desires and have your best interest at heart and go to work for you. So I recommend you interview multiple realtors, 2 at least. I would suggest you interview someone that does it full time, particularly in a shifting market that we're in. You want someone that this is their profession, they're not enthusiasts or hobbyists, or what I like to call comma realtors. They do real estate and they do notary republic and they do, all these other type of things. They do Uber on the side, and we're not knocking any of those things, but in this market, you do need a true professional. So make sure you interview someone that's they do it full time. You'll want to try to get someone that's learning based. So if you could figure out what kind of designations they may have or they may carry, that would tell you what kind of schooling they do. We all have minimum amount of schooling to keep our license active. But when people go and get designations, et cetera, it kind of shows they're committed to their craft and they're spending money to stay on top of their craft. Personally, about 80 to 85% of my business is from referrals, and I really pride myself on that. So one of the things I'll do is I'll have an intake form that I'll, no matter what stage you are and how early you are in the buying season, I'll get some information from you on what do you like, what do you think, what do you know? And I ask 2 very important questions. How do I win with you as a realtor, and how do I lose with you? Because those things are going to help me better serve you as a client if I can get to know you a little bit better. So those are just some high level tips, but I would say number one, find someone that's full time, interview multiple people. Look at their statistics, and they should have some type of statistics available on how long they've done it and what type of rate and things like that. So those are just some high level tips that I would say that would serve you right. And they want to have other partners like Tirrell or an inspector or an insurance guy, because there's going to be 8 to 10 other people you're going to come in contact with that's in the equation. So hopefully your realtor is one of the ones you hire early on, and maybe they can make that a lot easier so you not have to interview 8 sets of people. So you can find someone that has a referral, an in-house network, so to speak.
No, those are absolutely great points. I do have another question that has come in from one of our listeners, Ms. Tammy. She said, what advice, in this corner a little bit, what advice do you have for aging homeowners? The reality is the current system does not allow you to win. You can pay your mortgage in full, but with escalating taxes, homeowners on a fixed income are unable to pay their taxes, ultimately losing their property in some cases. Have you got that? What are your thoughts to Ms. Tammy?
Well, I'll take that one. It really depends on what you define as aging. I definitely believe, especially if your house is paid off, I don't think, taxes or insurance shouldn't be, too high, but that's not for everybody. Some people, it may be too high for them. We also don't just do purchases. We do, different types of loans. We even do what's known as reverse mortgages. Sometimes they had a bad name, but I think it's an awesome product. I recommended my parents to do it myself. That's where, you actually don't have to make a payment, but tax insurance, and you and your spouse can live in the property, for life. And then your heirs have an opportunity to purchase it back. If you're finding it in trouble, just to, maintain just tax insurance, I would just say that if you're going to rent, it's going to be a lot higher payment out there. I would think that it's going to be a lot easier if you're aging, if you're able to do something like a reverse mortgage or some different type of loans to help you out and not have to maintain a mortgage payment plus tax insurance.
I can piggyback that for just a little bit, and I'm going to make an assumption for this response, but assuming they're aging and not alone, have some form of family somewhere nearby. And 2 things that you might think about is there are some senior communities where maybe there's some shared services and things like that, where you don't have to do everything, or a lot of things are included, with the HOA and things like that. The other thing that I'm starting to see a little bit of, if you're into the multi-generational thing, and I've actually not so many of my African-American clients, but with other nationalities, I'm seeing a lot of multi-generational where families are living together. And there are a couple builders out here, at least in the Houston market, where they're building homes that are designed for multi-generation. It might be an efficiency apartment inside of a larger home. So if there's other family at least connected to these aging people, maybe that's something you could be thinking in advance and planning to take advantage of something like that, where maybe you can combine some households, thus, because ultimately, most of us want to be responsible for our aging parents if we can. So again, those two responses kind of assume you have someone else in your life, but just, for information purposes.
The follow-up question to the reverse mortgage, Tirrell, it says reverse mortgage heirs have an opportunity to purchase back. Speak more to a reverse mortgage and how that works.
Okay, well, it's kind of like the name, it's reverse. So what happens is that you have to be at least 62-year-old. Well, actually, the youngest spouse has to be at least 62 years old. If you're 70 and you marry somebody 30, you can't do reverse mortgage, unfortunately. Both of you have to be at least 62 years old. And the way it works is, for instance, let's say if you wanted to, because you can refinance or buy. If you wanted to buy a home, let's say a house is $300,000, a reverse mortgage will allow you to put, and I'm just going to give a number that I know is kind of right. You put about 50% down, depending on what your age is, but you can buy that house for $150,000. Now you don't have to make a payment, and you don't have to make a payment ever. You just got to maintain your taxes and insurance. And what happens is that every year, instead of your balance going down, it goes up. But the great part about it is that, as we spoke a little bit earlier about, is that the value of the house normally goes up. So once, let's say you're 62 years old and you have this house, you're not making any payments, and you both pass away when you're 90. So you've been in the house for 30 years, you made no payments, but you left the house to your children. So what happens at that point is, let's say that you started at $150,000, $300,000 house. After those 30 years, you may owe $350,000, but we're going to assume that after 30 years, that house may be worth, 500, 600, 700,000. You may be more than that. So what you have done is you've left that house to your child. So now the bank, and they don't give them just 1 month. I've seen them give up to a year. They give them a chance to get their finance together to decide, do I want to purchase that house at what my parents owe at the time they both passed away? If one passes away, the other one still can live there. It's not done there. They both have to pass away. And they give you, and you can actually, the child can actually buy before they pass away if the parents want to go to a different community. And they'll say, hey, Dwight, right now you owe $460. The house is worth $700,000. Do you want this, or do you want to give it back to the bank? And of course, Dwight, being an intelligent person, is going to say, no, I'm going to buy that. Even if I sell it, I can make that money. But your parents got to live 30 years without making a payment. And that means they probably were, like Mr. Nomad, going on a lot of trips, enjoying life, giving you a lot of pictures for you to remember. And I think it's a great product for the right type of person.
Gotcha. No, that's great, because in a reverse mortgage, typically that asset, that home, that piece of real estate is ultimately going back to the bank in a reverse mortgage, correct?
No, not at all. Most of the time it goes back.
Really?
Oh yeah, no, it does. No, the bank cannot get it back unless the heir said that they do not want it.
This is in the case of a reverse mortgage.
Yes, sir.
Okay.
They're called HICM loans or reverse mortgages, and you have an heir, and they have the opportunity to purchase the home back. Now, let's say that the reverse mortgage outgrew the balance, and they said, "Hey, you owe $500,000, but the house is worth $450." At that point, you can decide if it's emotional, you may want to still keep it, and you just have to, get a mortgage to cover it and put down what you need to. Or, in most cases, it's going to say, hey, this house is worth $800,000, after 30 years, and you owe $600,000. Would you like to get a mortgage and pay us our $600,000 back? Yeah, so the heir always has the opportunity. They cannot keep it first. It goes to the heir first. The heir has to be the person to say that I want it to go back to the bank because I have no emotional ties to this, nor do I want to deal with this.
That's great feedback, and hopefully that answers our listeners' questions. Dwight, I mean, so Tirrell is bringing up some things kind of in a broader perspective that everybody has to think about at some point in time, and that is, I don't know if succession planning is the right word, but the estate planning as parents or grandparents get older and they look at the disposition of their assets as they get older. Nobody cheats death, so to speak. What are some of the considerations that about in terms of the transitioning of real property and assets as they get older? Fundamentals.
That is a really good one, and I love coming on this show because I feel like I learn more than any of the audience all the time. So I think the key is information and knowledge, and just thinking about in advance. Not waiting for things to happen and taking a proactive approach. It's not something that we really have in our annual client situation, but it definitely gives me thought in terms of how we can add more value to the clients. Maybe start speaking to that as some of our clients grow older and things like that, to start planning around that. So I just think I know many times when I'm buying a home, I'll have a lot of folks say, this is my forever home, this is my last home. So I'm always encouraging them to think, do you want stairs or not? Or if there are stairs, might you have a second bedroom downstairs? So I'm thinking about it kind of more or less in the moment, but futuristically. But I haven't had in my short real estate career, I'm a little over 6 years now, I haven't had a lot of folks that have gotten to the point where they've gotten out. Now I've liquidated the estates of some deceased siblings and things like that, but I'm usually being brought in after the fact. So I have to kind of plead that's not something I've put a lot of thought into my practice, but as a wealth advisor, it makes perfect sense. I mean, I know know some folks with certain title companies that deal with heirship affidavits and things like that, but fortunately or unfortunately, I've gotten it when it's already happened. Now I'm getting ready to list one right now for a widow. She's been widowed about 4 years. Her kids, her daughter and son-in-law are building a mother-in-law quarters at their place. They're pretty well off, and now they gave her the time to kind of do it on her schedule, and now she's going to move in with them, and then we're going to get all the heirship papers in place, and then sell the home. And another frat brother, same thing. His dad passed away, so we're going to sell his home once it's probated. So at present, I typically get in on the tail end of that. It's already happened, but it does give me an awesome way to add more value to my client base to start thinking around that and building some programming around that. So that's something I'll add to my repertoire.
And actually, this is something that you can both kind of speak to, because when we think, and we've had some conversations on prior shows about intergenerational wealth and planning and communication styles, because everybody does not communicate the same, and everyone doesn't really have the same sense of willingness to communicate the inevitable. And so let's say if you have someone who is a boomer, pilot who may still be living, and they talk about the disposition of their assets, and then you have the younger generations say, well, what do you want to do here, and what do you want to happen if something happens? In the older generations, a lot of times they don't really talk about those types of things, and I think it's just a part of their culture and their upbringing that they just punt the ball or kick the can. And then the younger generations, man, if something happens, we don't know what we're going to do. We need to know what to do with the house. And if there are multiple children potentially that involved, it makes it a little bit more complex. Who should be handling what? Who get it? So, Tirrell, what are your thoughts on this very much? What are your thoughts on this? Because this is one of those things that can be extremely delicate.
No, it definitely is delicate. And the biggest thing that we can do as professionals is to ask questions. We can't, throw any kind of, words in your mouth. But as Dwight said, you're saying it's my forever home. So probably the biggest question when you say it's my forever home, are you going to want to go up and down those stairs the rest of your life? That's why he is bringing up points about there should be, even if you have upstairs bedrooms, you should have a way to move downstairs eventually, because not too many people that are retiring want to go upstairs every day if they don't have to. So as professionals, those are questions that we need to ask. I ask, what does retirement look like for you? Are you going to travel? Do you want a second home? What can I do right now to affect your retirement when you're ready to retire? When do you want to retire? Some people want to retire at 50. Some people want to retire at 80. Don't assume that everybody retires, at 65. So the best thing we can do as professionals is ask those open-ended questions, listen to them, and also educate them on what we've seen, but not assume that because I got this answer from this client that it's the same for this client. We have to ask those open-ended questions and observe their answers and help them, make the best decisions moving forward.
I appreciate the feedback. Excellent sound advice. And folks, we are in the last, definitely time to start asking more questions on the chat line, calling in if you desire to ask a question or provide your thoughts on anything that we've shared today. But this is outstanding information. I want to kind of turn corners here. I mean, we're less than a month away from 2023. And, there are a lot of prognosticators, analysts out there who are saying that they're expecting a recession to happen in 2023. How does that potentially impact the real estate market? Folks who are looking to get into the market, what might a recession do or happen? As a crystal ball, or maybe an accurate crystal ball, but it's not like it would be the first time we've been through a recession. This might be a unique one just because of what this market has looked like.
You want to take that one? From my standpoint, I've not worked through any real recessions. I got in the market after the last one, but from what I read and what I hear, number one, a lot of people don't necessarily think it's going to happen. But if it were to happen, I think at some point in time, rates would have to come back down. So if we're always planning and preparing and saving for a rainy day, just like whether it's real estate or stocks or whatever, he who is liquid or has the ability to do things, there might be opportunities, because I think at some point in time things will would have to come down, and if you're liquid to some degree, you have an opportunity to take advantage of that. Because we still have inventory shortage, that's why I think it's my opinion. I don't know how bad it could be. We still don't have enough houses for sale, so with all that in mind, I don't think it's going to have, in my personal opinion, without the crystal ball or out very much basis, I don't think it's going to have a major impact on pricing. I have a friend of mine that thinks he has a crystal ball. He's not a realtor, but he's just waiting and waiting for him to buy a $500,000 house for $250,000. I don't think that's going to happen. I really don't. Even if we have an official recession, I don't think that's going to happen because one, inventory is short, and two, most people, unlike say maybe the 2007, 8, 9 mortgage meltdown, most people have some bought in equity and some appreciation, unless you're one of those that overpaid by $80,000 last year. So most of the people have equity in their homes, and we still have a shortage. So it's my personal opinion that it won't have a major impact on prices. I don't think we're going to see blue light specials or half price things. That's just my own opinion.
It's not going back to 2008, 2009.
I don't think so.
What about you, Tirrell? What do you say?
So I did live through 2008, 2009. I've been in this since 1998. So I definitely have experience when
you've seen a lot.
Now, yeah, exactly, definitely. Now, with Dwight, I definitely agree. It's a little bit different, and that's why you have two different professionals on here. Because from my aspect is way different than Dwight's. He's right. The rates would probably go down. Values would go down. But from a lending aspect, the harsh part about this is that we become tougher as lenders. We don't approve people as easily because we have to worry about who can't pay. So now a person that could get in a house with a 580 credit score today, it may be a 640 when this happens, if this happens. So we're going to tighten the screws on our lending because we want to make sure that we're not putting people in bad situations, and we want to make sure we get paid back. We want to make sure that you can afford the property and it does not go into foreclosure. The worst thing for any lender is to have to foreclose on a property. It's not good for anybody. So we start tightening the screws on our lending practices, unfortunately.
Gotcha. All right. I'd like to acknowledge and welcome a couple of guests. Miss Lisa, hey, thank you for joining us, Lisa, and being an ongoing supporter of Black men. And then we also have a question from Tam G. If a home has been on the market for over a year in a great neighborhood, what advice would you give the seller?
All right. I guess I'll take that one as the real estate expert. I hope it's not your own personal home, Tam, in that situation. But again, we speak truth to power. So here, but at any rate, it can only be three things. The things that sell homes are location, condition, and price. So as per your comment, it's in a great neighborhood. So we're going to assume that to be factual. So obviously it's not the location. So either there's something wrong with the house and it's good. Either there's something wrong with the house from a condition standpoint, it hasn't been maintained, or maybe there's a flaw in the home that's something that hasn't been disclosed, or it's overpriced. That's the only two things it could be. It's either there's something wrong with it or it's overpriced. And the market, no matter which market you're in, buyers, sellers, whatever, the market has a way of speaking to us and correcting us. So when you overprice the home, it stays on the market an exorbitant amount of time, even in this market. When you underprice the home, if that's the case, the market will actually correct you up by multiple offers, et cetera. So if that home's in a great neighborhood, something's wrong with it, or it's drastically overpriced.
So corrections in the real estate market similar to corrections in the stock market.
Absolutely.
I would love to weigh in as well on that one. Okay. So, that's definitely a question for Dwight, and he's 100% correct on that. But as I said earlier, what's happened with this market, with the rates going up, it forced lenders, since our business is down over 50%, we've had to come up with different products to have solutions for problems like this, where Dwight is going to work with you on making sure you price it correctly. One thing I would say that we have a product it's called a 2-1 buy down and a 3-2-1 buy down. And the reason I like this, especially in this situation, is because you can advertise this house, and you as the seller, you're going to pay for the buy down. So it's not going to affect the buyer. So you're going to offer to pay, let's call it a 3-2-1 buy down. The average you're going to pay is about 4%. But you're going to tell this client the average rate today, let's call it 6.5. With a 3-2-1 buy down, the buyer will now get a 3.5 interest rate for the first year. Year 2, it'll be a 4.5 interest rate. Year 3, it'll be a 5.5 interest rate, and then it'll go back to what it should be as 6.5. So now this buyer is going to feel like they have the opportunity to buy where the rates are low. They're not starting at a 6.5, they're starting at a 3.5. You paid for it, and now they reap the benefits, but it makes your house more attractive to sell. You offer this product and they're ready to go. So what do you think about that, Dwight? Is that something that you as selling a house would make it a little bit more attractive?
Yeah, it'll absolutely put more eyes on it and create more value to the buyer. I think one other thing, which is a byproduct of price, you might have an underperforming realtor, but that's not marketed home. That's a small slice. But if it's on some MLS, that's probably not the case, even with a underperforming realtor. But ultimately, you probably have a seller that is not motivated. So,
right.
So I don't want to assume it's something wrong with the house, but it is one or the other. There's either something wrong with it or it's priced wrong. And price wrong could be a seller saying, if somebody's stupid enough to pay me, this is what I'll sell it, but I'm not going to sell it any less than X. That's a non-motivated seller. So, which is the same as price.
Gotcha. We have another question. Mr. JW, how much does the 3-2-1 buy down cost?
Well, with me, it depends on if it's the buyer or seller, but
okay.
They're all a little bit different. Depends on the price of the house. But what we do a lot of times, we get the seller to pay it, and the buyer can pay it as well. But the way we make it manageable for the seller to pay it, if they're going to, sell a house for, let's call it $300,000, we would say, hey, market this to my client at $310, as long as the value is met, and you pay. And in this instance, I would say it's going to cost close to $12,000, and you're going to, you're going to pay this, but you're also increase your price by about $10,000, so it's not out of your pocket. And now my client is going to get, such a lower payment, and in a lot of instances, the payment could be $600 less per month for the first year, and then, $460 less for this, second year. So, it's a win-win for both. They paid a little bit more for the house, but they paid it with getting this great advantage.
Yeah. And to the theme at the top of the show, if you're not with a professional that does this on a high level, whether it be a lender or a realtor, they may not even be aware of these type programs.
Right. Or even have them. Every lender doesn't have them.
Gotcha. Last question, and then we'll have to wrap everything up for this evening. We're almost at the top of the hour. We're in December. We'll blink, and it will be 2023. Some midterm elections. There have been, a little bit of shift in terms of what the balance of politics is going to look like in the legislature. Anything that you anticipated based upon the midterm elections and a shift in the House now being split, at least at the federal, what impact that could potentially have on the real estate market, if any, or is it irrelevant?
I didn't really anticipate anything. I kind of just, to some degree, as crazy as it sounds, I like to operate in a bubble. Mm-hmm. We talked about keeping the emotions between the lines. I have to help people wherever they are. If you have a need to sell, if you have a need to buy, I need to be able to find the best situation for you. So I really didn't have much in the way of what I anticipated would happen. Mm-hmm. And I think it's just kind of business as usual, being informed in today's market and giving you the best advice in today's market. That is really all we pride ourselves on, is being able to help you make informed decisions. We don't make decisions for you on what you should take or what you should spend, right, but we give you all the information to make informed decisions that you can be comfortable.
And it's primarily coming from a legislative or a policy standpoint, given that the House will now be controlled by the right, the Senate will be controlled, by the left, if that impacts anything whatsoever, or if it's just, business as usual.
Correct.
Gotcha. Tirrell, what do you say?
Okay. First of all, I'm seeing some, great questions, and like with, Tam G and some others, if you don't mind, if you can make sure you flash both myself and Dwight's numbers across there.
Absolutely.
Absolutely. After this show, just so we can go a little bit more deeper if they didn't get all the answers they want.
Okay.
Or that they needed, I should say. But I'm 100% with Dwight. We haven't worked together, but we have a lot of the same mannerism and beliefs. I operate in a bubble. I can't assume if it's controlled by the right or the left what's going to happen. Mm-hmm. But I will say, just from this standpoint, is when one house is controlled by the left and one controlled by the right, usually a lot doesn't change because nobody gets their policies through. But when they do change, we will know what to do. So if anything does change, then we'll know what to do. I'm not going to say what will happen, but if it does happen, just know that we're prepared to take you in the right direction then.
Gotcha. No, I appreciate the feedback. And what we're going to do is we have one last statement by Ms. Tam. It says, no specific question. Just stating there's a lot of new neighborhoods that the sellers are competing with. In addition, there's upside down and unable to sell without coming out of their pockets. I think that was more of a statement maybe than a question that was in the chat line.
Yeah, if you're competing, if you have a relatively new home that you're trying to sell and you're competing with the new home builders, they have way more money and way more inventory, and they can give way more concessions. So it does make it challenging. So at the end of the day, if you have to sell, we're going to give you that sound quality advice. Maybe we're going to develop a strategy as best as possible to compete with that builder. But there are situations, if the motivation is strong enough and you have to get there, we're going to deal with the pain versus the pleasure. If you got to get to Chicago to take care of an aging parent for whatever reason, and you got to go, then we're going to help develop a strategy to make those losses be as little as possible. But sometimes people have to take losses. It just depends on the motivation. Or maybe we put you in a situation where, maybe you can lease that house out until the appreciation comes back or new construction slows. But it's all going to come back with partner with a person that knows why you're selling, understand your motivation, is going to do the right thing by you. So once we know all that, then we can develop the best strategy. But yeah, it's really tough if you're selling in a home that's still being developed and there's lots of new construction inventory, especially this time of the year, because they're taking some L's just to get things off the book so they don't carry those losses into 2023. So if you're having to compete with that right now, it's unfortunate timing.
Gotcha. Well, now we will give you both an opportunity to make some closing wrap up tonight's show. But of course, folks, do please, we're providing their information so that you can get in contact with them and ask any more detailed questions and engage with them on your real estate service needs. So, Brother Johnson, closing comments and thoughts, and then Tirrell, and then we will wrap up tonight's show.
Gotcha. Another awesome show. Again, I'm most grateful for the opportunity to be on this platform. Anytime I get the call, I'm instantly going to move things around my schedule because I think there's so much value in it. And like I said, we talk about we need to get that gap. We need to close that wealth gap. And real estate is still the way, whether it's in the up market or a down market, real estate is always going to be the way to close that wealth divide. So just grateful for the opportunity. And I am out of the Houston market. I do have connections literally around the country. So if you want someone that's going to operate the way you feel my passion coming through the voice, reach out to me and I'll partner you with someone wherever you may be around the country. But if you're in the Houston metro, I definitely love the opportunity to have a complimentary, no obligation consultation with you to see if we can't earn your business. All
right, good deal. All right, Tirrell, closing comments.
Well, first of all, I got to say this, Dwight, I'm extremely jealous for you to be as knowledgeable as you are, to say that you've been in this business for, you said 6 years?
6 years, just a little over 6 years.
Unreal. I mean, I wish a lot of us could have been even close to where you are at 6 years. So that's just awesome.
Thank you.
I'll end it the same. I'm in the Dallas market, but I'm not limited by borders. I close, a lot in Houston. I close a lot in East Texas. I can go anywhere in Texas, so I can help you there. My biggest thing is I love the passion of the viewers and their questions. Don't be afraid of this market, guys. Definitely, get with us. Let us develop a strategy for you. Let us sit down and understand you. Make sure if you get with a different professional, you get with somebody that listens to you, that understands you. But you also got to take their advice as well, too. You're not always getting what you want to hear. But the rates are not too high for everybody. Let us sit down with you and let us figure out a way for you to win in this market.
All right. Outstanding. We want to thank everyone for joining us tonight. We want to, of course, thank our special guests, Tirrell Richard and Dwight Johnson, for providing absolutely superb thought and knowledge in terms of how you are going to continue to grow your legacy through real estate. And ladies and gentlemen, we want to thank you for joining us every Wednesday. And if it's, of course, Wednesday night, it is Black Men Speak. Good evening, everyone.
Thank you.